All right, we are live. Yeah, I was just looking at Boeing there, so just haven't really paid attention to it too much because I've just been waiting it for it to finally break down a little bit here. 200-day moving average is right here at 359, 360, right? So tagged, right? Tagged the cloud right here, came back up, right? Inside day, tried to break the upside, tried to break the downside. So almost a bullish engulfing day, not entirely, but the real body engulfed, right? Then inside day, right? Right after the right after the lower bowl in Japan, breaks to the upside, comes back in, hammer, inverted hammer, however you want to say it. Um, then a shooting star, right, takes out those levels, right, and then today tags off its 10 MA, which is pointing straight down, right, and then to me it looks like a momentum shooting star. So what that means is that should get a push to the downside. Now it's within the cloud, so it's got it's beyond all those resistance points, and then another push to the downside. So that was what I was looking at there. But let me get this tweeted out here real quick. Sorry. Da, 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 da. All right, we are live. So, hope everybody had a great trading day today. Um, I hope you weren't trying to short everything today. So, because it was just powerful day, right? So, let's just real quick review. Well, actually, let me make sure this is working because before I wasn't able to log in here. So, hey, what's up, going on? What's up, Parakeet? Good to see you. All right, sorry guys. So, all right, so here's a look. This is basically today's pivots and all that stuff. So if you see all these lines, a little bit crazy, but we opened. In fact, let me go to the 5 minutes so you can see what I was looking at earlier today. So we gapped down to, I know it's odd to see a gap down, but it was encouraging because there's really no reason to be super bearish, right? Other than that we keep on making these new highs, right? But um, when we got down today, it was to me, it was. Let me see where we're at. I think it was at this level here. Yeah. Okay. When we got down today, it was I was looking to fade the gap this morning. So when we got down, we got right down to this volumetric level. Okay, and I got that off of just taking the SPY chart and just taking the volumetric level off of the volume profile and then putting that key level right there. Okay, so we gap right down to that. So to me, it's worth a shot to fade the gap, and so that's what I did. Right at the open, and grabbed, did a call, and basically it just worked. Right? It tried to test the downside, and that, I think, it tested downside one time or something like that. To set just like a real, relatively tight stop, like a dollar stop on it and all that stuff, and then just, kind of launched. I had to run to a meeting like somewhere around here, so I ended up, getting like a double on that one. But golly, if I held that, it just pushed, right, came up into this 5 minute cloud, right, and then broke out of it, stopped for a little bit, hung out near this R1 level, which we'll talk about these levels this weekend, and paused there again and then just kept launching. Paused again for a little bit, consolidation, then launched again, and it came down and then launched. It just launched, and this is a weekly level right here. This is a monthly level, the green one. So I would have expected it to pause there a little bit longer, but just went right through that, right, blew through that pivot resistance right there, came back up, pulled back a little bit, and then broke the weekly level, and then finally stalled out here at R2. And again, we'll talk about what those are on Sunday. So, yeah, so pretty incredible. Like I said, we talked about the other day, if on the 5 minute chart, in a lot of charts, but on the 5 minute chart particularly, if you follow the 5 MA and the 10 MA, if this 5 MA is over the 10, you really don't want to be shorting there, right? No reason to short there. Okay, so there was a chance, so I was long here, that was profitable. I think I tried one here on this this death cross because we were pretty close to this level, tweezer top type setup. I thought we might try, but it was so close, it wasn't even worth doing it. I shouldn't have done it. And I think I got out kind of for pretty much scratch on the trade. But because where was it going, right? It was already above this, basically the support level, and so all I was going to do is come back and tag it, and then it bounced, right? And it consolidated for a little bit. I think I got out like somewhere here. I was like, I'll just get out. I'm glad I did, because it put it in this bar, and that would have been a nasty stop out. But anyway, so I ended up being profitable on the day. It was a good day, and then that came up here, looked like it might have tried to come back in around this R1 level on the weekly pivot, and then came all the way back up to R2, and just kind of went around. So really only one major death cross today, and that was right here. And I was looking at some internals. But let me show you just a review. So the VOL SPD that we looked at yesterday. Look at this today. Was there any reason to go short? Just no. Here, right, we talked about yesterday. Boom, huge shot across the bow, right there, right? Pause, and then another huge bar that that we had this the death cross here on the 510 MA on the vol, on the vol SPD, and then it was a down down move from there. I mean, we saw nothing close to that today. This was just machine buying, straight through the entire day. It was incredible, right? So really no reason to go short. This was the only one that might have been like, okay, maybe we'll get a pullback here, right? So a little shooting star right there, and then a red bar. But I mean, did the 5 MA cross over the 10? No, it didn't, right? If anything, it kind of got flat over here, kind of consolidated, came back up. But I mean, that's really nothing. There was no bar. There was nothing like this, right? There's no selling pressure at all. There's no selling. It was just a dot, right? Just a little dot. So that really helped. If you guys refer to that, I think I tweeted that out today. You could have looked at the tick, right? That was the other market internal that we've been reviewing, right? So, for the most part today, let me go into today. Remember, we only care about just the highs, right? So, I mean, boom, high tick. What did this hit? This hit 1256, right? I mean, buying is going on, and any of the low ticks, I mean, nothing even got below 850 until like maybe one shot at the end of the day, and that was it, right? So anyway, so hopefully that's helpful. So overall, big picture, the SPX. Let's take a look. Let me just make sure everybody's okay. Good. Just want to make sure we can hear me. So overall, big picture, SPX. Let's take a look at the daily. Where am I? Over here. There we go. Okay, so daily. So just like we've been tracking for a while. Right, we've got the channel that went through all through 2018. We've got the major pitchfork level that basically helped us find the bottom. We were thinking it was going to help find like a pivot point right here, and it was working really well. And we blew through it. So when it blows through it, we continue, right? We just go with our trend, right? And so here, amazingly enough, this channel is actually a projection. This is a trigger line off of the and a trigger line off of the. If you go back to the Andrews pitchfork lesson. The trigger line is basically just a line that goes from the start of the pitchfork through the end, through one of the ends of the pitchfork right there, and serves as another point of potential. So if we see that, that's actually this channel, right? Which is pretty cool. So this channel is really technically a place where we might find some resistance, and that will basically be all-time high. So if we get up there, there's a reaction line up here too. Potentially, that's at 3008. Right, so if we somehow get there earlier, it's like 29.95, right? So we'll see. I mean, money's obviously going in, right? You solved it. I mean, you don't have to look at an indicator. You can just look at the volume, right? The VOLSPD. I mean, it's it's going up. So that's just what's happening until things change. Until we see otherwise, right? Just go with the trend, right? Just go with the trend. So that's all. So that's basically all I got there. So so today we're going to finish up the discussion on market internals, and this is going to be a real quick one. It's the CPCI. Okay, what's the CPCI? It's the put call ratio. Okay, this is for there's a couple different ones that are in put call ratios that are in Thinkorswim or possibly in your platform, like TradeStation's got a bunch of them and all that stuff. But the CPC, I mean, basically the put call ratio, and this is the CBOE index. So basically your Chicago Board Options Exchange, right? So this is basically all your options, right? So what this is a ratio, right? So it's put to call. Okay, so basic, fractions, right? So you put your puts over your calls. If your puts are bigger than your calls, it's going to be a bigger number, right? So here you can see, let's just go back here. This is 319 at what time? At 9:30 a.m. So beginning of the day isn't really. There's a bunch of shenanigans there, but we can take a look here at the SPX, see what that looked at 319 at 9:30. Let's go back to 319 at 9:30. Okay, so that was this day here, right? So it's kind of really doesn't say anything. So at this point, everybody's really bearish, I guess. When we were gapping up, and then and then it pushed higher, right? And then eventually, obviously, it came back down. So the point is this. So the put call ratio, all it is telling you overall sentiment, right? But just like so, there's a word of caution with it. Just like when you look at your like your open options, right? Like so your open interest and your options and your volume. Let me see if that pulls up here real quick. Hello. Okay, let's pull up some weekly options here. Oh yeah. So you got your open interest column right here. You got your volume column right there, right? So just like that. I mean, especially on some stocks, you could be like, oh, it's got really high up, and you don't really know what's going on there, right? You don't know if it's before if it's especially at the volume, right? You don't know if somebody's doing hedging and all that stuff. So a lot of times it could be a little misleading, the put call ratio. But in general, it can be used two different ways. Okay, so primarily, it just is an indicator. It just tells you that, hey, there's more puts than excuse me one second. I'm sorry, I'm going the wrong way here. Okay, so here it is. So in general, what it's saying is, how many puts there are relative to the calls, right? So if there's more puts than calls, then in general, the majority of the market, right, whether they're hedging or not, is taking a bearish position, right? They're putting on more puts than calls. Okay, so you can look at that two ways. In general, it's the first way you'd think to look at it is, okay, well, everybody's really bearish, so I'm going to look to get short, right? Um, but uh, but the reality is that you can also take the contrarian stance on it, which I think is the best way to trade it. Because look, here's the reality: the majority of people that are new to trading, right, or retail money, whatever you want to call it, right, is looks to trade breakouts. They look to trade, like they chase stocks, right? They chase all-time highs, and professional traders, right, or experienced traders, take the opposite of those trades because they know everybody's going to try to get those breakouts, right? And so they take the opposite end. So if the majority of people, right, are getting bearish on something, chances are, if it's a majority, then it's going to include a lot of retail sentiment, right? So if the majority of retail traders or inexperienced traders are putting on puts, well, chances are, right, there's a smart trader on the other end of it that's going to take the opposite end of that trade, right? They're either going to sell the puts to them, right, or they're just going to get calls. Okay, so it's a great way to especially when it gets really high, right? And high is however you want to see it. In general, it's a ratio, right? So anything over 1, right, is basically going to be bearish, and anything under or have more puts, and anything under 1 is going to have less puts, right? So, but let's take a look here of what that did today on the 5-minute chart. So initially, at the open, right, we had more puts than calls. Okay, and what happened? I think we know what happened. So at the open, right, we were down here, we had more puts than calls, right? And doesn't that make sense, right? So don't you think like a beginner trader or a retail trader would see that we're gapping down, right? And they wouldn't have these levels for the most part. They wouldn't know, hey, this is volumetric support, right? We're gapping down into support. I can fade this gap up. So they see we're gapping down. We had a huge push down from from the Fed, right? Continuation to the downside, right? Everybody's like, oh, the world's going to end, the world's going to end, right? I mean, I was going on Twitter and I was looking at hedge fund managers. I mean, like major fund managers are like, oh, the bear market is in, right? This is, doom and gloom. Everything I saw was doom and gloom after the reversal after the Fed. And this is just stuff that happens after the Fed, right? So, as traders, we have to ignore, I mean, it's good to know macro stuff, but we have to ignore all that macro stuff and just kind of be like, what's the setup, right? And does it make sense for us? I mean, my setup this morning is to fade the gap, right? And so, I'm not, and if I get stopped out, I get stopped out. No big deal. I'll try it again next time, right? Because I'm not going to risk all my, all my trading capital on one trade. I'm going to make a sensible trade, and if it works, great. It works great. So, so that's the point. This came in, we got follow through in the morning, right? We gapped down. So everybody's, doom and gloom going in the morning. And, you go to the CPCI and you can see that. And when you see that over 1, it starts getting kind of high, I always take the contrarian view, right? Because it's very rare. Crashes are very rare, right? I mean, they happen, of course, but we can capitalize that when they happen. We'll have, indicators that tell us that's happened. There was nothing indicating that this market was going down this morning. The only thing here that somebody, maybe a retail trader, might have looked at and be like, hey, the put call ratio is high. It's very bearish right here. I should get short. Well, I'm seeing this, right? I'm thinking it's time to go long, right? So that's one indication right there, right? And then, of course, here it dropped down because why? Because everybody who had their puts, right, dumped them because they got squeezed, right? And then, what does it do here? All right, let's go to 1035. Da, 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 da. So we go 1035 here, right? Oh no, right? So I mean, what's it doing, right? So we have this. Well, here I'm at my meeting at this point, but right, we pull back a little bit, right? We pause. Okay, so some people take some profit here, whatever the case is. Okay, now it's going to be doom and gloom, right? So this is right, or it's like a 50, like an H cell setup or something like that, right? So there, you saw it right there. Everybody starts getting bearish again. They're like, okay, we're now the market's going to roll over, and the market is just brilliant at being irrational, right? So I mean, obviously it makes sense, right? I mean, if you come in and you're new, you're like, oh no, it's pausing here, it's going to go down, right? Well, no, it didn't do it, right? Because why? I mean, the market's goal is to take out as many people as possible, right? I mean that's really it. We just have to be, as traders, we just have to be able to catch those moves. So I mean, we're not going to move markets, right? For the most part. So we just want to catch those moves that we can be profitable on, right? So here you can see back at that 1035 level, everybody got bearish again, like, oh no, it's going down. And then what did it do? It launched, right? And then everybody covered their puts, right? So that's really what happened here. And then again, it happened again, a couple times later. And I don't have to go through every example. You guys know what happened today. It was just an incredible move to the upside. So I will say the calls that I had this morning were $4. It's because I got pretty close in the money. I think we here we are. We're right here at the volumetric support. Right, I think I got the 2830s because I was like, well, I don't want to get too expensive. 2025, let's see if we can get a 10-point move or something like that, right? And it went there. Gosh, so they were like $4 at the open, and then went all the way. I mean, they ended up being like $30, like 30 something dollars. So it would have been a $400 trade turned $3,000, base trade all the way up to here. So, and then I don't know if Clayton's in today, but he was messaging me earlier, and right here at the very low, at where were we at? Yeah, like 28.16, 28.17 ish. I think I can't remember which ones were the 28 something, 28.50s. Something was like 5 cents, right? And they went from 5 cents to like $3 or like over $3. So imagine buying 100 of those. You'd had a 500 trade go to $30,000 today. That would have been a pretty awesome day. So anyway, it's tough to predict these huge moves up, right? Because you still want to preserve your profits as you're moving up. But just looking at the overall market today, I mean, there's this was, I think, the only spot to be short. This is where I tried to short today one time. I certainly didn't risk any of my any large part of my profits here, but just to try, just to see. And but I had reason to, right? Because we tweezer top, death cross, so just give a shot. And I mean, that was kind of my target here, but there's basically double support, so it really didn't make too much sense to do it. And then boom, it shot to the upside. So anyway, so hopefully that helps. So that's the CPCI. Look at it as a contrarian indicator. That's how I look at it. I think it's the best way to do it. Or if anything, just look at it as something just to see what's going on, what kind of volume you've got going on with, what kind of action you have going on. Well, it does have volume down there. What kind of action you have going on with puts and calls. So, I mean, don't read too much into it right at the open, right? Because at any open, people are, going crazy, right? But in general, it should give you some clues as the flow of the market starts to go. So I hope that was helpful. And that concludes this week's Market Internal session. So if anybody has any questions or chart requests, please feel free to type those into the chat window. We'll get through as many as we can. Obviously we'd like to finish up at 10 o'clock, but we'll see what we can do. Tomorrow's Friday. I'm actually home tomorrow, so I plan on trading at the open, hopefully. So we'll see. I don't think we've got NVIDIA as a 60 anchor, so we might trade that in the morning, and maybe we'll take a look at some SPX stuff with those levels, those floor pivot levels, and might be able to trade something there. And then throughout the day I'll take a look and see if we can find some good lottos or something like that to trade towards the end of the day. So, and then it's Friday tomorrow. So remember, options expire tomorrow, so just be careful that you're not stuck in a trade. And if you are thinking about swinging anything in options, don't have one that's going to expire that day. So think about the next week's options or the monthlies. So okay, cool. So Prayer Kid, what's going on again? 503, what's up? Good to see you. Andrew, how's it going, man? I'm glad you made it. And Harvey, always a pleasure, my friend. Netfry, what's going on, buddy? Manoj, how are you? Manoj, okay, question 1. In SPX options spreads, why on the money call and put has so much price difference on the call side? And two, I heard SPX options expire on Friday morning. Is that true? So no. So just to answer your next question, no. SPX they expire at the end of the day, just like all options, right? Um, so let's go to the SPX, and I've got a treat for you guys. I'll mention it right at the end. So da, 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 da. Okay, so I think if I understand what you're saying, Manoj, so yeah, so Friday morning, no, you're good. You can hold them all the way through the end of the day. Um, so that's good there. And then your other question is, so option spread. So you're talking about the spreads here, like 950. You're talking about the spread between the two. You're not talking about like a credit or debit spread, right? So you're probably saying here. So here your spread is 50, 70 cents here, and on the 28.55s, and here it's 70 cents too. So but they probably vary during the day. I'm guessing that. Um, and so in the money call and put has so much price difference on the call side. Okay, so I think I know what you're saying. So today we had a lot. Now, just so you know, I mean, they're not mathematically perfect when you trade them, right? So options are guided by supply and demand too. So if you have a bunch of people jumping into calls, right, it's going to drive the price up a little bit more, and it's going to get a little bit crazy, right? So especially if it gets like, if you're trading the Fed yesterday, right, it's going to jump up and down and all that stuff while the market's going nuts, right? And so the spreads are going to increase from bigger, and they're not always going to be 30-cent spreads. They're not always going to be 70-cent spreads, right? So yeah, so ideally, you know, it's nice to try to get filled like somewhere in the middle, when you're trading those. But for the most part, you have to know if you're trading SPX, right, that they're going to be spready, right? And so you have to keep that in mind. So if you say you buy one of these calls right here for 950, one of them is going to cost $950, right? You got to be careful, right? You don't want to just put a stop at like 850, right? Because right, it could click you out with one tick basically. So you want to manage your stops and all that stuff and how you manage those trades, to give yourself room. So keep in mind too that let's say you're risking like you only want to risk $200, right? So you're thinking like here I get in at 950, I'll just put my stop at 750. But just remember if that stop gets hit at 750, it's probably going to fill at 720 or even 710. So so you had a $200 risk that turned into almost a $300 loss, right? And so that's just something to keep in mind when you're trading those. So hopefully I kind of covered what you were saying there, but it's that supply and demand of the options themselves and any volatility that goes in, because the ask could spike because a bunch of people are hitting the ask or taking the ask, and so and the same might happen the otherwise too. If people are dumping them and all that stuff and marketing out, they're hitting the bid on those, and it just pushes that spread down, right? So they move just like stock price too, just with supply and demand. So hopefully that answers your question there. Sandy, what's going on, buddy? Okay, so it was chopped with SPY day trades today. Hope tomorrow will be a better day. But calls on Nvidia and W worked well for you. That's awesome, dude. Yeah, because Nvidia was incredible today, and W, you know, it seems to me with SPX, if you got chopped up, you're just in at the wrong times, right? So, and some things could help with that too. I mean, you could use those ticks. I got a lot of ticky, a lot of tiki alerts today. So just kind of look for those, and we'll talk this weekend about SPX. We'll go over those levels. There's no reason to be trading SPX without levels. And I use the floor pivot levels primarily and volumetric levels, right? And so we'll go over those some more too. So you can see when you add those in here, right, it's almost no reason to get chopped, right? Because, why? Because once you broke these levels, right, it was clear that the next target was right here, right? Now you could get chopped here, right, because it got through, double levels and wanted to test that, right? So these are, chop zones, right? And so, but if you incorporate those moving averages, if you're looking at the 5MA, right, there's no reason to really get, to get too chopped up. So, especially if you're trading two targets, right? So here, I mean, honestly, like I tried, I was happy with the long here. But if I had a little bit bigger screen here, I would have seen, kind of this hammer. You got these nice bottom shadows here that are all hanging out around this R1, and then boom, you've got a gold cross right here, nice move up here, and then can just kind of ride that up, that type of thing. So, but I'm glad you got that. And let's take a look at W. CW, like in my opinion, that would have been easier to get chopped up in, right? Because I mean, here you are, like, oh, here's a great trading on that. So whatever your methodology was, worked out well. So I probably would have gotten really chopped up in W, but I'm glad you made some money on that. Congratulations, that's great. And yeah, awesome, man. I'm glad Nvidia helped too. Uh, can you please look at Nvidia Legend? Yeah, GH and W. Yeah, okay. So Nvidia, let's take a look. Let's go to our favorite area here. Okay, so well here we are on W. So just kind of watching this in general, right? So we saw here, nice gap up here for earnings. Just kind of working it. There's a midpoint here of these pitchforks that that Thinkorswim doesn't draw, but there's always a midpoint line too that you could use as a point of reference, right? So it's kind of hanging out there. I would look, obviously looks bullish. I think a good target here is this 185, 187 level, and then I would look for a pivot there to see how it handles that. It went from over bought to slightly overbought, so I think it's and it's consolidating pretty nicely up there, so that's got some potential. And then however you do it, like 1, 2, that could be 3, might be ABC 4, and then working on wave 5 back up. And then Nvidia. So Nvidia's been pretty awesome, right? We were talking about this the other day, looking at a 1, 2, 3, ABC 4, and then possibly 5. It did get through this volumetric level again. Yesterday was a little bit a little bit on the edge, right? Because I said yesterday, if it breaks through that 172 level, we could see some more downside. Well, it didn't, right? So it obviously, with the market, went back up. And so we've got this gap line right here that it might try to tag, and then might find some resistance there tomorrow. Also, it'll be overbought too. So I would look there and look to maybe see if it gets a little bit through the gap and then kind of comes back down. So very possible. To me, this looks like a zigzag now. So 1, 2, 3, 4, 5, A, right, B, C. And then, so we got another zigzag we're working up here. So 1, 2, 3, maybe pull back, tomorrow, we'll see. And then 5, and then back down. So to me, this is very, it really looks like what's happening right now. So that's a nice Elliott wave setup. Okay, so that's NVIDIA. Let's take a LGND, your favorite. Yeah, I mean, looking great, man. So remember we had those 2 pause days, and then, like we said, it might tag this. I thought it would kind of consolidate a little bit more, but nice push up today, 5 points, which is great. And then, coming right into this Fibonacci resistance area. So just watch that. Look for some consolidation, and then maybe another move back up to that 156 level. And then GH. GH, I'd have to say, wow, huge awesome market. Like today, you've got a big push down. That's very, very bearish, right? Nice open gap. It looks like it's targeting that open gap there. I would look for somewhere 75 to 78 as a potential target. And one thing I will say too is you've got bearish divergence on the RSI, right? So to me, it's running out of steam. Right. Interestingly enough, the Fibonacci fan happens to correspond with that 78 area, so I think that's a possibility. So good. That's an really interesting looking stock there. So, in fact, I'm gonna add that to the game plan. I don't know how this one trades, but I'm gonna add that into the game plan. Man, that looks good. I got a lot of things on the short list, but I like that GH. Nice one. Okay. Cool. Sandeep, and last, ATVI. Yeah, let's take a look. We were talking about this. Oh, nice. So what did that do? Yeah, so I was like, boom, right there, and then, I mean, just nice, right? Hit right on that Fibonacci line. So again, on this one, I'd say possibly some consolidation, and then your breakout level is 50. So consolidate, maybe break to the upside. Nice, kind of cup, handle, break to the upside. So really good stuff there. Good. Michael, what's going on, buddy? Apple. Boom. Look at that. All right, so nice move, right? We've been tracking this one since it gained favor, right? We got through, cup, handle, right? Cup, handle, break. Okay, so it's just in that break phase right now. So I mean, right now, you got this large time frame pitchfork right here. I know it's a little crazy with the fib arcs, but it's working its way up, to that. Originally, I was saying 200, but the way it's kind of moving, possibly 203, 204. But either way, look for a pivot in this area, and then it might get some further downside here. But really nice move since the cup, handle, break. So awesome one there. AMD. AMD, I'm a little bit. I mean, we'll keep an eye on it, right? So AMD is really interesting. It huge move today, obviously, right? And it's been really pretty good so far. But right now it's at volumetric resistance. Okay, so just be real careful here. If it can't handle 28, it might push to the downside. So, and then it'd actually be kind of interesting because this would curl back over the RSI, and you'd have your bearish divergence, and then it might, be a self-fulfilling prophecy, right, and head back down. So, I'm a little bit bearish on AMD at this point. And then BAC, yeah, this one I was wanting to. Came up on my short radar the other day, and look at that. So it came all the way up here, and then just boom, all the way down. My target was this gap fill, this 26, 27 level, and it already moved, pretty significant for Bank of America. So that's pretty good. So the one thing you want to see here, right, obviously, is that you've got this huge zone, right? But for the most part, where the gap is, so you've got this is kind of like your gap support. So just be careful of that right there. So I mean, if it breaks through, this 2786, then it might go for a gap fill, right? But if anything, just kind of use some caution here, and has the potential just to consolidate and then go back up. So yeah, triple top though, right? So that's also something to look at. Good stuff. Jay, what's going on, buddy? Nudie Poo, what's going on? Rhythm, what's going on? FB, yeah, let's take a look at FB. So FB has been pretty interesting too, right? So it's been really enjoying these Fibonacci levels, pretty well. We tracked this with the bearish divergence on the RSI recently. I think we tweeted this out like last week that it looked like maybe it could, fill this wave B and then go back down, and it did. Came up, got through the volumetric support, failed down to the downside, hit the Fibonacci level right here, basically at the arc and the fan, and then came back up. So at this point, it was a little bit of a lagger to the Q, so it might want to continue to push up and get back to that 170 level. But I would just watch. It did look bullish on the candlestick chart. Watch out for the hourlies going into some cloud resistance there, but here it looked pretty good, right? We had an inside day 2 days ago, broke that to the upside, gave a nice Yuri-Kiri bar basically over the 200-day moving average, and then held the 200-day moving average again with with a pretty decent hammer today. So it could be a possible measured move, pause, move. So that's another possibility as well. But if it fails, right, this tail fails, or if it can't hold the 200 moving average there, you might see it push to the downside. In fact, that's worth putting an alert right there too. So if we're bearish tomorrow, or if things aren't looking good, that's your 200-day right there. So that's worth keeping an eye on. Pritesh, what's going on, buddy? MDT was a good game plan for day trade. How does it look for tomorrow? Well, good. Yeah, thanks for tweeting that out today too. Great job on that. Let's just review that real quick. So double inside days, you guys know, is one of my favorite. It's just a very consistent strategy that I like to use. I only like to use it on stocks that move, and MDT is actually a pretty decent one to trade. I've traded this before. It just trades well, right? The spreads are usually pretty good. It's doable, right? So part of the double inside day plan, right, is if you have, so here's your mother bar. This bar was inside this bar, and this bar was inside this bar, right? So that's what I call double inside day. Okay, so usually I like to trade it. If you gap down, I like to fade that gap, and then it usually can reclaim at least 50% of the inside day range, that double inside day range, but has a really good chance, higher probability 50%, and then a little bit less probability, but a good chance of reclaiming the whole day, right? And then possibly the next bar, and then if it really goes crazy, it breaks out there and then takes out this bar. So today, MDT gap down, and if you're kind of watching this, right? We gap here, right? Came down, touches the cloud, right? So I mean, not a bad place to try to enter, right? And it has your 200-day moving average right here. So as soon as it blew through the 200-day moving average, right, you keep your stop at the low of the day, and then boom, it takes the inside day right here, and then it actually, I think, Pritesh, you tweeted it that it had already reclaimed the day like right here, right? And then it went a little bit higher and then just ended up being a really nice trade. So even with the market going crazy today, right, you could think to go long on this one because the market was just ripping. And you don't even have to worry about what the rest of the market's doing. You just focus on your one setup that you like to trade, and then boom, make money, and you're done. You don't have to worry about it. Wait for another setup for another day. So that's one good way to look at it there. In terms of continuation of double inside days, sometimes I do. Sometimes I look to see something, and a lot of times there are. Like I've tweeted out before, you can get a double inside day and then it ends up going to new highs. So I've seen that on a lot of stocks like Costco for a couple months ago, and several months ago actually, before it, yeah, so back in mid 2018. But a lot of times you can see that, you can see some continuation move. This one, just kind of, I probably wouldn't trade any sort of continuation on here. You're hanging out right at the mid Bollinger Band. It might stall out for a little bit there. So nothing really on this one that I see. But if I see like a really major stock, Medtronic's cool, but like if Facebook or something like that is consolidating, or Apple does a double inside day, or Amazon, I would look for some continued movement in the direction of the break on that, because for the most part, price is decided at that point, right? Because we go inside because it's indecision. It represents price indecision, right? So because it can't decide, right? It can't decide whether to break to the upside or break to the downside, so it goes inside. This one really can't decide because it goes double inside, and that's why I like it so much. Gaps down, right, and then reverses, right? So that's kind of the trade right there. There's a lot of other techniques too, but we've done multiple videos on that. So yeah. So for now, I'm not going to mess with it tomorrow. Nudie Poo, CGC, yeah. Speaking of inside days, let's see what this one did. So this thing has been just consolidating like crazy, right? So this, hopefully you can see this triangle. Let me go to the bar chart so it's a little bit clearer. So you can see this triangle right here, right? It's just been consolidating. It keeps on trying to break out of the triangle. It keeps on coming back in. Right at this level, you see this red line right here? That's your volumetric level. So it just keeps on building energy and volume and all that stuff, and eventually somebody's going to give up, right? So either the bears are going to give up and this thing's going to launch, or the bulls are going to give up and it's going to break back down, possibly down to 41, or possibly back up. So what I would do is continue to watch this. It might be worth looking at a straddle or something like that the next couple days if it continues to consolidate. Yeah, they look pretty liquid. So here, for instance, if we stay at like this 46 level, I'm going to do like a 46 straddle. So that would be like, so buy, straddle, for 115. And so if you look at that, basically, well, this is this week, so I wouldn't do that. But I would do like the monthlies. Let's see how that looks. Yeah, so this is going to be a little more expensive. So, $4 or $5. So the question is, will it move more than $4 or $5 if it breaks? And so let's look at the next pivots, right? So if it's a triangle, right, you want to basically, on a triangle, you want to target like kind of like these levels here. So you see, duplicate. So if it goes, down here is at $5. So it goes 46 down to 38. So that's like $10, right? So it could potentially move $10. So basically, if you got a straddle somewhere in here, if it could stay inside this level like till the 28th, I think it would be worth getting a straddle, because honestly, the straddle is going to get cheaper because it's going to be so consolidated, because the premium is just going to get drained on both sides, right? Because it's not doing anything. So theta and chop crush, right? And so I would imagine that those Aprils, if it chopped around till here, what were they costing again? $5.58. I would imagine they'd probably be down to like in the fours if we got to the 28th and still no movement. And I would totally do a straddle there through April. To think that we would move $4 in one direction or another, because once you go beyond that, you're in the money, you're rocking. And let's say it came all the way up here, right to this volumetric level, so you'd be up in your calls pretty extreme. You could sell your calls and just, the puts would pretty much be paid for, and then just hold the puts, and then if it keeps on going, you basically could make a huge trade off of that. So that's what I think about CGC. Net Fry, Disney. There's always hope for Disney. Disney, I'm going to look at. Everything's been ripping, right, except for Disney, and so it's going to be fine, right? They just spent $70 billion on Fox assets, so just give it some time to consolidate. Here's a big level that I think I need to draw the weekly on this one. Let me go weekly. Yeah, so this is basically a trend line from way back yonder, and it bounced off of that. So here, let me remove that. Let's just see how we do at coming to this trend line here, and I bet you it would hold pretty well as a support. So might get some further downside. Like I said, these trades, these big acquisition trades, are great to trade, right? So let's. I think it was on the 30 orb list today. I didn't even get a chance, to look at it. I was, busy with all the other stuff. But when IBM did its big, that was like one of my best trades last year, is when IBM did its big acquisition of Red Hat. I mean, it's just phenomenal. I can't remember when. Yeah, this is the big day down. So this was our 15 orb day right here, and this is a 30 orb. Look how well that was. So that was 110 all the way down to 108, which is pretty good for Disney, right? So nice 2 point move there. And then here you had 109 actually down to the 108s, the kind of 108s low. So I mean not bad, right, for Disney. And so just keep watching that. I mean right now I think it's kind of probably going to consolidate a little bit, but I do want to see it get down here, get to kind of this 102 level, and then I would probably start considering buying. That's my opinion. And I'm sticking to it. Andrew, what's going on, buddy? TTD. TTD is a great stock to trade, but it's this is my friend Scott's favorite stock right here. So guys, this one could go to the moon. And happy birthday, buddy. 40 cents here, but it gets like 70s, and they jump around a lot. So just be really careful with TTD. But if you can catch the right side of it, this thing can move like today. If you somehow caught this thing, I mean it moved $10, right? That's a huge move. And so really strong, right? Big gap up. We talked about this flag, right? This bull flag right here. Broke to the upside, came back in. What did I say? I said, let's look for pullback. And what did it do? It broke the bull flag right there and came video output issues, so I'm sorry, guys. But just tune in here at this time, Andrew, if you missed it. It should still record. So CYBR. Very strong. Stronger than TTD. Look at that. Blew right through the upper Bollinger Band. So that was pretty strong. And possible continuation there, but that's a big bar today, so look for some consolidation as well. And then Coop, you're picking all these great ones. This is a great industry to be in right now. They're just getting so much money flowing into it. It's ridiculous. Like Vive and all that stuff. So I mean, just a nice move here. I mean, really hit the upper cal and look at that, tag that whole number $100 to the tick right there. So just be careful of that, and might get some consolidation or pullback there as well. Pre-test, yeah, and then AVGO. Still going. 300 was we wanted to see that 300 break. So so that one there. So just again, try it again. This one just could keep moving. So everything looks really bullish on AVGO still. So after its earnings win. So all right, guys, cool. Oh yeah, let's see. Manoj, thank you, BH today. SPX and the money call was 950, and the put was 5. Oh, I see what you're saying. So yeah, it depends how you're looking at it. If you're looking at the exact price, isn't hard to trade put. On SPX, just learning no trade yet on SPX. Yeah, just be real careful, Manoj, if you jump into SPX. It's dangerous to trade, right? So you definitely have to get used to it, right? So you probably want to paper trade it for a little bit so you can get a feel of the flow for it, because it could turn on you. It could hit 50% stop pretty quickly if you're not. It moves really fast. But yeah, so yeah, they can differ. It just depends, where that, like you said, just like that supply and demand. If it's getting a big push, right? If it's moving like it was today, I could definitely see the calls getting really expensive like that. So, and Sandeep, yeah, let's look at ALGN. Oh, huge move today. Awesome move today. So, I mean, yeah, it looks like it really wants to aggressively try to get that 293, that 200-day moving average right there. So, definitely worth keeping an eye on this one. So, I like that a lot. I like it a lot. Let's see. There. Yeah, got through volumetric. Look at that. Perfect. Failed head and shoulder, and I mean, it might be trying to put in like another shoulder here at the head and shoulder. It looks like we've analyzed this before too, but what did it do? It broke out of the Fibonacci fan area, and it broke out of volumetric resistance, and then you got nice push, right? So you had all this congestion zone stuff, and so there's your next level there. If you can get through 286, then I think you can get more push to the upside too. So hopefully that helps. All right, guys. Well, I appreciate everybody's time. So I'm going to try to trade live in the morning. We'll take a look at the NVIDIA 60 anchor at the open, and we'll take a look at levels on SPX. And hope you guys have a great night. And oh yeah, the quick update. So I've got a surprise coming out this weekend, but I want to give you guys a heads up here. So just so you know, I'm going to keep all my my free stuff. Always going to do these free videos as long as I can, as long as I have the energy to do it. And free game plans and all that stuff. But I am planning on doing a newsletter, starting a newsletter this weekend. So where I'm going to go really in depth with some swing ideas, some deeper into some charts, and it's just going to take so much time on the weekends that I'm going to have to charge for that one. So if anyone's interested, please feel free to sign up once I announce it. And there's going to be a lot of perks that comes with it too. I think I'm probably going to give out some free stuff like like the free draft version of my ebook, and maybe even do like a free kind of like side alert thing or something like that for like SPX and anchors. So just so you know that, but obviously we'll keep all this stuff free. So, but it is something that's pretty exciting coming out in the future. But in the meantime, everybody have a good night and a good trading day tomorrow. And I hope to see you guys online in the morning. And I will talk to you guys later.